You know, you're basically guaranteed profit, even if it's a little bit of profit from every one of these zones if you mark them up properly. What's going on, guys? Ben here. Welcome to this video. I'm going to take you through a super simple trading strategy, literally a foolproof strategy here, guys, that you can use on any symbol, any pair, and it really simplifies your trading. The hardest part of this strategy is actually being patient and waiting for the setups to set up, and you know, not trading just for the sake of trading, because that's, you know, most of the point when people lose their money. So what we're going to do is we're going to start off on the weekly time frame. We can see here the weekly is bullish, and a breaker structure here, bullish. So we can mark out here weekly is up, like weekly equals uptrend. Now, you don't have to mark this out. I like to do it sometimes just for reference, so it's there in front of me when I'm marking, you know, when I'm on my lower time frames, and I can just see, you know, which direction are we trading, etc., how much we want to risk here. Are we taking a retracement on the higher time frame? Are we taking a continuation, etc.? So I now go down to the daily, and that's literally all I use it for, just so I've got reference of where the higher time frame actually is. So now I've got the daily and the weekly lining up, and if we go back to the weekly time frame, you'll see I had this marked out before. I like to mark out strong zones of resistance, especially on the higher time frames. So we've got the weekly low here, and if we look what happened, you know, to price last time it came down to this zone, look how strong the rejections were here. Look at these wicks. Now this is on the weekly time frame, but there was strong rejection here, lots of internal breaker structure there, enough pressure, buying pressure here, that actually sent price up all the way to previous highs. We didn't break it, and that would be classed as a failed high. So when we see a failed high, we generally, as a rule, then expect the lows to be tested, if not broken. And I use failed lows and failed highs a lot when it comes to my entry confirmations. I like to use them on a 15-minute for my, you know, trading style. I'll show you that when we get down to a lower time frame. But we can see here, this would have been a very good point of interest to buy. Price getting down to the weekly low, a lot of liquidity lying down here. So let's go down to the 4 hour. Now I've got our structure marked out there. We'll keep this with us. Remember, I only use this weekly high, these weekly and daily structure points here as reference for when I'm trading the lower time frame. You know, they don't really influence my lower time frame trading or my intraday trading, you know, that much. I do prefer to trade with the market, but it won't stop me taking a decent retracement trade from a good zone with confirmation. So I like to keep them there, just as reference, because then if we get down to a zone like this and we see a big breaker structure in a big potential reversal zone where there's a lot of liquidity in the market, then, you know, I'll potentially risk more, etc. But that's for a different video. So we've got the 4 hour here, and we can see the 4 hour low here. Let me just bring it in a little bit. I'm trying to rush through with the lines, guys, so I don't keep you here all day. As you know, my markups are normally very neat and tidy. That's normally because I'm not recording myself doing them, and you know, I spend a few hours doing them in the mornings for, you know, the members in the group. Okay, so we can now see the 4 hour is bullish as well. We've got a 4 hour breaker structure here, the impulse, and we are expecting a retracement, whether from this zone or this zone here. So when we get down to the 4 hour and the 1 hour, we've got the 4 hour up, so you can see all these time frames lining up now. So ideally we want to be looking for buys. If you want to be super safe, if you're brand new, I recommend that you only wait for buys. Just be patient, don't worry about losing out, don't worry about jumping in the market, because that's when you always lose. You know, if you mark up these zones, I can practically guarantee 9 times out of 10, if you wait for the zones to be hit and you wait for the low time frame confirmation, you'll be stopped out very rarely. People only get stopped out because they jump in the markets too soon, or they've got their analysis wrong, or they're just thinking about money and not focusing on the process. So we've got weekly up, 4 hour up, and the 1 hour up as well. I think we'll just zoom in a moment. But what I've done here is I've marked some supply zones out with my pink boxes here. So these would be 4 hour supply zones. Now these would be zones I would be looking to take sells from. Now those would be retracements on a higher time frame, but with confirmation, there would be good trades to take, because if the market's going to reverse, we have imbalances here that need to be filled before the market reverses and actually, you know, continues the bullish trend. And as you know, the price doesn't just move in one direction, it moves like this. So 4 hours, we've got our 4 hour zones marked out here, and we can refine these zones once we get inside them. And you can actually trade order flow pretty well with these zones as well on the lower time frame. I'll throw that in towards the end. So I mark my supply zones out in pink or red, and I mark my demand zones out in blue. So now we've got the 4 hour high. Sorry, my nose was like leaking then, I don't know why, it's random. And we've got our 4 hour high here, current high. So as you saw here on the weekly, like if this high fails again, it doesn't look like it's gonna, it looks like to me it's gonna potentially break up here, fill in this inefficiency up here, then retrace all the way down, and then potentially go up, because this looks like a head and shoulders as well. If we get this, you know, pattern here, not the neatest drawn, but you can see what I mean. So I am looking for a good strong reversal there. Look, you can see this is mitigated here. There might be, you know, some small inefficiency on the lower time frames the price might wick into and wick back out of. But right now this looks like a reversal on gold. So while we're on the 4 hours, guys, I like to mark up my supply and demand zones, or potential reversal zones, buy sell zones, whatever you want to call them. And then we can refine them as we get down. So we've got our lows marked here, daily low, bullish, and 4 hour low, bullish. So this would be good zones as well to look for buys and reversals from. So let's go down to the 1 hour chart here. Zoom in a little bit more, tighten all this up so we can see. So we'll mark this first one as 4 hour demand, and we'll put that at the right hand side, just so that's the reference there. And then we've got our, we'll just put it at the same one, 4 hour and daily low. What I'm looking at from here is, now we're on the hourly, we can refine some zones that we want to be looking at, zones of interest, where we're not going to touch anything until price gets into those zones. So we have got here, let me move that because I drew that as a trade the other day. As you can see, price went into there perfectly. Mitigated, whatever you want to call it, in there. So we've got a pretty big demand zone in there, so we can refine that. But that's one potential zone here. Let's look for some imbalance. There we are. There's one. There's here. We've got inefficiency above. What we're looking for here is basically an order block. We've got two. So we've got two potential zones here that price could come back to and mitigate. These would be very, very strong zones. We've got the 4 hour and the daily low confirmation. We've also got refined order blocks here. This order block actually broke structure, and it broke structure in a violent way. Look, it left, you know, lots of price inefficiency there. So in an ideal situation, we'd expect price to come back, basically tap into this zone, not break through it, and just, you know, take off in the opposite direction. As long as there's no inefficiency below, which there is, we've got some here, look. So price could come all the way down on the daily and stay bullish, but it could come down to basically the daily low, wick into there in the same day, you know how violent gold can get, and then close all the way back up here and then continue. That would be a ridiculously strong buying signal to literally buy and take it all the way up here. So look out for that if you see it. Let's go back to the hourly. So we basically come on the charts, we mark up our direction. 1 hour is up. So right now the market is positive. It's all flowing in one direction, from the weekly to the hourly anyway, up. So let's just recap where we are so far. So when we come onto a fresh chart, we just want to mark out the structure of the weekly and the daily, just to give us an idea of which direction ideally we want to be trading if the opportunities present it. There's nothing wrong with trading a retracement. Just remember, when you're in a retracement, that you're trading against the higher time frame. So you could also use, you know, less risk if you wanted to. If you risk 1%, you could just risk 0.5% on your retracements. It all depends, you know, on your trading style, etc., etc. But that's for a different video. So, and then we go down to the daily. Sorry, I was rushing off then. So we've got a daily breaker structure here. Actually, daily change of character there. 1 second. Yep. Did close, I think, just below that wick there. Zoom in a little bit. Yeah, here's a daily change of character. Yep, this high. Start from this high, broke. Yep, that candle closed below that wick. Yeah, there we go. And then the break above came up there. Yeah, so we've got a daily change of character there as well. So that gives us our daily low here and our 4 hour and daily high there. I actually missed this. I didn't zoom in enough when I did this markup. I put the daily high up here. But anyway, it doesn't make a difference to where we're at. But that's what you got to look out for. Be more careful with your markups. But anyway, it was daily still up. Look, we've got a daily breaker structure here. Daily change of character there. So let's go back down the time frames. Let's go to the 1 hour, 4 hour, sorry. On the 4 hour, this is where we start to mark out our zones of interest. And that also shows you guys, you don't have to be perfect with trading. You know, you don't even really have to trade with the market if you don't want to. You can literally mark out these zones, wait for your lower time frame setups, and just mark up your targets and just get in and just follow proper risk management, guys. And you'll be good. You know, you'll always make money because you've been patient, you're waiting for the right zones, and then you're waiting for the lower time frame setups and confirmation. And you're going to be right, guys, 9 times out of 10, you know, doing that. So, and if you're, well, right 9 times out of 10 if you're looking at a 1-to-1, you know, risk to reward, maybe a 1-to-2 if you're lucky. You know, if you're going for bigger risk to rewards, then you're going to be looking at, you know, a lower win rate. But, you know, you're basically guaranteed profit, even if it's a little bit of profit from every one of these zones if you mark them up properly. So then we've got the hourly. Let's get back to looking where we trade now. So we've got the hourly and the 4 hourly. This gives us a good zone to look at, you know, for the day. This is what I'd be, you know, looking at in the trading day, looking like the range to trade in between. If this high fails on the 4 hour, then I'd be looking to trade down to, you know, the 4 hour low. And yeah, price might be choppy, it might come up and down, it might do this, but eventually it'll tap into that low and then it'll continue or it'll break through. But most likely it'll continue, or we expect it to continue, because order flow is bullish on the 4 hour. So what I'm going to be looking for next week is I'm going to be waiting to see what happens at this key level here. If this breaks, then I'll be looking for a continuation. I'll be looking for, you know, a flip, basically something like this. Or a double breaker structure, and then you know, retest into here like this, and then I'll be looking to, you know, take it up to those levels there, as long as we see confirmation here. Or on the flip side of that, I will be looking for, you know, another rejection, a breaker structure here, and then maybe a second breaker structure if you want to be super safe, and then I'd be, you know, targeting down here. First target would be the hourly low. If the hourly low breaks, then I'd be looking, you know, to take it straight down to the, you know, the 4 hour low, but I'd make sure that I'd be taking partials, you know, at this point, and then, you know, leave the rest to run. And we'll cover that as we go into lower time frames. So 1 hour zones, let's just make sure we've got everything marked out here. So we've got zones of interest. So big zone of interest here. This is definitely a zone that you could look at setting a limit order from. Yes, we've got this underneath. However, this is the 4 hour. It's 4 hour demand, it's higher time frame demand, and it's the daily low as well. And a breaker structure actually came, you know, from this point, and, you know, this point moved the market that much. So, you know, more than likely we're going to get a big rejection from this zone as well. If it does break, or if it does continue to go straight through, but it doesn't matter. I mean, if it did, you know, for some reason, because anything can happen in trading, if it did somehow, you know, go all the way down to this lower order block here, you could literally, as long as you got confirmation, you could make all your money back and a lot more, as long as you're using proper risk management, of course, you know, going down here, you know, and that's what it's about, you know, losing's part of the game, you know, and so many people message me all the time, you know, when you take a loss or something like that, and it's because they over leverage, they take the profits too early, they don't let the trades run, you know, and they just panic, you know. So an easy way to get around this is just manage your emotions, guys. You know, trade with what you can afford to lose. When you can afford to lose it, you're not emotionally attached to it, and you'll find it easier, you know, to create a plan around that. You know, one reason why most people fail is because they don't they don't have a plan, but they don't have enough capital to make a sustainable income from Forex. They look at the Lambos, they want to get rich and all this, but if they have $1,000 and they're risking 1%, you know, it's not going to be life-changing income for them if they're making 20% a week, is it? You know, they can barely, well, they wouldn't even be able to, you know, live on that kind of money. This is another reason why a lot of people fail, is because they just simply don't have enough capital. So they over-leverage, they risk, you know, they want to try build up that capital, you know, but then doing that, you're just building bad habits at the end of the day. And, you know, it's not advisable. You know, if you don't have money to trade, or you can't, you know, be disciplined with your plan, just don't trade. You know, do something else. You know, I just wouldn't bother. You know, the markets are there, the markets are awesome. But I mean, if you're marking out zones like this, and you know, liquidity zones, or potential liquidity zones, potential reversal zones, whatever, and you just wait for the trade to hit them, wait for the setup, 9 times out of 10 you're going to be right. And then all it's about is risk management. And going back to what I said, if you don't have the capital to risk, like a lot of people don't, they over leverage. So then if it does go wrong that one time and it wipes 30% of your account out, and that was money you needed, all of a sudden you're fucked, and then you're getting revenge trading, and, you know, it just spirals downhill from there. But anyway, digressing now. So we're back on the hourly chart, guys. Mark up the zones here. That looks like it's filled in. So yeah, let's go down and let's start looking for some entries. Now we're on the 15-minute zone, and And again, I like to look at the 50-minute zone for refining order blocks from the hourly and the 4-hour. Here, we could have a potential bounce. This would be a zone of interest, actually, a demand zone here. We have got a small fair value gap, as some people call them, imbalance, whatever you want to call it, here. So I would put an alarm there, and that's a zone I'd watch. But if this started, if we got failed high here, and we've got, look, internal break, we've already got a failed high, because look, this pushed up, and then price pulled back, but failed to break it, and actually broke internal structure here, it looks like, on the lower time frames. We'll have a look. And then it's going up again. So if that fails a third time, that could be a very, very good potential sell when the market's up, and we could get a wicker liquidity, whatever. I'll wait till it settles on Monday, but that could be a very, very good sell all the way to the 4-hour low. We'll just have to wait and see what happens. I've also got this trend line here, and I like to use. This is for a different video, though. Oh, for God's sake. So I always like to use trend lines, because you find whenever a trend line breaks, you'll always get price going in the opposite direction. So you can use them for sells. Like this would have been a nice sell here on the trend line break, above the last high, and then aim for the previous low. Would have been it's like 70-80 pip trade. Doesn't look that much on this time frame, but if you mark up trend lines and you trade trend line breaks, or you back test it, you'll see that it is a very powerful strategy. If you wait for a 15-minute candle close below or something like that, it's awesome, and they work really well when you're trading away from supply and demand zones as well. They don't work that well when you're just like mid trading range or something like this. So they're good to use, but you got to use them in the right place. So if we refine this here, we've got an order block here. So price could start ranging here. We don't know. We never know what's going to happen. We just take educated guesses on what's going to happen, basically. So price could range here. It could turn into like a Wyckoff schematic, create a shitload of liquidity, wipe it one side, wipe it other, and then choose which direction it wants to go in. But if it does that, no problem with us. If it wants to create a channel, we can trade that channel, no problem. We just wait for the failed highs or a wick here, and then we'll just trade that failed high, back down to the failed low. We'd be taking, profits here and here and here to make sure we get our capital out and it's safe, and we're protecting our account. So on 15-minute, we have got we've marked up all our trend lines here, so that's cool. So let me zoom in now. So let me just have a look. 15-minute is actually, we've got a change of character actually on the 15-minute. Look, so we had a break of structure here on the 15-minute. We had a push up, break of structure, and then we've actually had a break. Oh, that's not very straight, is it? I had a break of structure down there. Look, beautiful low time frame mitigation. Look into there and sell off straight through the trend line, straight back to the hourly low. I had this low marked out for a buy, because chances are structure wasn't going to break. How bullish gold was and had been this week. So, I saw a few people catch that buy on Friday. I didn't bother with the buy. I sold from the top here down to there. I think we got that trade on Friday. I can't remember. But I did 2 bangers on Friday, and I was like, screw it, I've made the money now for the day. I'm coming off. I'm going to go do something, better with my time. I don't want to end up giving my profits back to the market or, messing around. I've done that too many times before. It's another value bomb, actually. Overtrading used to be a killer of my profits. I used to make a shitload of money and then just give it all back to the market. So I always advise, when you make money or when you make profit, to walk away for the day. Set goals. Want to make 1% for the day? Make it 1%, leave it. Come back the next day. Fresh. Your emotions are taking control. You're not angry. You're not, overexcited. You're not euphoric. You're not stressed. You're done. You're finished. You go do some Delta day. Go do some back testing. Go do some studying. Go to the gym. Enjoy your life, and then come back the next day. I've actually started trading less. I've been doing more studies, more time on my charts, and actually less trading and more waiting. And I've seen a lot better consistency. So that's something else just to let you know there. So 15 minutes. Let's have a look where the 15-minute is here. We've got the break of structure up. 15 minutes is bullish. So we've got 15-minute demand. What it might say, I'll mark it out again. And we've got 15-minute supply up here. So if that 15-minute supply holds, you see we're creating basically a range within a range here. You see this is starting to range here, and then now we're getting a consolidation here. a lot of the times when you see a consolidation happening towards the top of a trend line, it's because they're building liquidity to break that trend line. You'll see that again if you go back and backtest that. So I don't want to predict what's going to happen, but it looks like it's going to shoot through and continue going. But anything could happen. Hopefully it pulls back, gives us another filled low here, maybe a liquidity hunt, maybe fill this small imbalance in here that we can see. It gives us a good buy, to get in. If we get price, breaking down here, hourly closes back above here, so hourly stays in structure, 15 minutes stays in structure, so it's giving us confirmation that price can't push any lower. There isn't the selling power, and price now is going to go back up and retest the highs. So failed highs, failed lows. You always know whichever one it is, the opposite. You can always assume that it's then going to go retest the opposite, which is a failed high. You can assume price is going to retest the lows. You need that with confirmation though, and you can do that with 3 5-minute candles, or 1 15-minute candle, or 3 15-minute. It all depends how you trade and what time frame you trade on. You can also use the 3 EMA if you want to. So when you see a crossover, EMA crossover like this, if it lines up with your confluences, which I think this did on the lower time frame, that would have been a nice sell here. And look, we had a crossover. 1 second. If we zoom in on our actual entry time frames, say look here. We had this broke this trend line this way on the lower time frame. You can see how you can trade in both directions. You can literally buy and sell on any time frame, any time of the day. There's always opportunities to buy and sell. So don't always think you have to be stuck, with one bias or something like that. It's all about being fluid in the market. So you can see here, I don't use the EMA crossover really at all. It's just a tool, that I picked up, time ago, that somebody else was using, that kind of correlates with, how my trading style, works on the lower time frames. It's something I'm looking at building into an EA. Works really well. You'll see it in the supply and demand zones. You get the confluence. So look, supply and demand zone here, look. So we got a breaker structure internally here. We got a failed high again here. Here, look, this was the failed high there. Failed to break above after the breaker structure. So that was our first confirmation. Internal breaker structure, mitigation, but failed high. And then we had obviously price consolidating a bit here. This is where I actually took the sell on Friday. And I'm going to put it on the group so you can see it, on the video so you can see it. Look, the EMA crossover perfectly. And then we took that short above the highs. Literally here, yeah, it was literally exactly here. I only used a 20 pip stop loss. I actually took it earlier though. I took it after that breaker structure. I got in a little bit early because sometimes gold takes off. I don't mind getting in off the first confirmation, but look, it came close to the stop loss, and then we got it all the way down there. So that was a nice, as I say, 120 pip move we took on Friday. But I literally took profits down here. I was like, I'm getting out here. I left a runner in the trade, so I left, I think it was like 20% at this point. I just left in, or 10%. Stop loss at break even. And then it ran down there, and I didn't even have a take profit in case it ran. I just left it, and then it got taken out of break even back up here. But I had this marked out as a buy. I'll put the original analysis on the video as well. So we can see here. Look, let me get rid of some of the noise, some of the shit off this chart. So we saw price coming down into this unmitigated zone here. Mitigated actually went underneath it, so it looks like it just grabbed the liquidity from underneath this zone. Yes, it did. Didn't quite hit that imbalance that we marked out there. So we might see price come down, wick it again. So that could be inducement, and then go up. But we'll just see what happens. We'll take each step as it comes. You don't really want to be, getting too trapped into, trying to forward plan and guess what's going to happen with the market too much. Just look at what the market's giving you and mark out your, your directions and your structure, and then wait for price to hit your zones. If you get confirmation, trade it. If you don't, sit on the sidelines. And if it ends up going in your way without the confirmation, who cares? You didn't get your confirmation. You've got to trade your system. So here, look, let's go down here because I like to take entries from the 1 minute when price hits my zone. So let's go down onto the 1 minute chart. A bit of 1 minute salsa here. So with all these bullish, ideally we want to be looking for buys. This would have been a brilliant trade to take, to be honest. But after the week I had with trading, which was a really good week, I've just been really disciplined, and I've just moved over to Dubai, and I've been sorting a lot of stuff out, building different websites, new businesses, launching and stuff like this. I was just exhausted. I was like, screw it, I need to get away from this computer for the weekend. So we can see here, look, we had a push down, and look at these failed lows here. This would have been a good limit order. So 1 minute zone here, push down, low here, look, you can see the low, failed low, look at that push up there. That would have scared a lot of people. That would have got the breakout traders selling, and then they'd have just got wiped out. You know, the stop loss had been above there, whatever. But this would have been internal breaker structure, I think. If we look on the 15 seconds, let's come down. No, maybe on the 5 seconds. Let's have a look. Going super low now. You don't need to be going on the 5 seconds either if you're a beginner. You can catch the first, like the best entry, shall we say, but you know it's also the riskiest to trade, especially if you trade in a retracement. So down, yes. So there, look, that high here is change of character here. Because the wick closed below that one there. Then we had a breaker structure, and then we had price never closed below this wick again. Look, you see. So after we had that breaker structure here, we could have got ready for price to mitigate this zone. And after it mitigated this zone, you want to wait for the rejection again. Look at that, another change of character here, like an internal one. Nice little. That's a lovely. I love it when I see that pattern. And then you could have taken it here. 20 pips stop loss below that previous wick after it got rejected, and you know that if you've got it wrong, because you don't want to use a huge stop loss, you want to get it right or get it wrong, and you want to know if you got it right or wrong straight away. So if we're correct on this trade, price shouldn't go any lower than there. If we've got our analysis right, it shouldn't go any lower than that wick. So then what we do here is we would be aiming for the 15-minute highs, or the 1 hour highs, whichever, the highs again of the zone where price came from, because we're in a 1 hour and 4 hour zone. 4 hour and 1 hour are both bullish. Daily is bullish and weekly is bullish. So we're looking for continuations, we're looking for buys, and when we get a signal for a buy, we want to be taking that buy with the smallest stop loss possible. We need confirmation first. If you waited for 3 minute confirmation, look, we've got a big wick down, basically like a railroad here, and then rejection. So you could have taken it on this wick here with stop loss below there, used a slightly larger stop loss, or if you want to trade a slightly higher time frame, let's go up to the 10 minute. You could have waited for this zone to break, because this was the, which time frame was it? Yeah, like we got a 5 minute breaker structure here. So if you wait for a 5 minute breaker structure, you've got stronger confirmation, but you're also going to have to use a bigger stop loss. I mean, if your safest stop loss would be down here, now that's a 50 pip stop loss, no problem with that. I mean, that will give you to the highs, back to the highs, a nice 1 to 2. I would have personally put it like here, if waiting for that breakout there, 1, 2. So after that candle here, you see how the market was pushing that candle up like that, the candle close, and then we've got this third one here. We could have taken it like that. After breaker structure, we got the close above the previous wick, candle close above, good sign. Then we can pull the trigger with the stop loss below the previous supply zone. We don't need to go all the way down here. You can if you want to be super safe, but you can use the previous supply zone there. So what was the entry method we used on there? And you can see as well, obviously, as it broke the trend line here, we got a tap of the trend line. This was basically a flip zone here. Look, so we got the break above, we got the retracement, and then a break above again, and then retest into that zone. So again, after that would have been a good place to buy there. Like if you wanted to refine it and buy up here, or if you got it in the bottom and you wanted to add a second entry. You could have just put stop loss there. Use a smaller stop loss. That here on this one, let me get rid of that, would have been your first target. This was the previous structure point. So that, and you can see, look, price consolidated there literally when it got to it. So that would have been your first target. So that was a nice 1 to 2 there, and that was done in 1, 2, 3, 4, 5 minutes. If you put 10 lot on there, it would have been a nice bit of coin fee on the Friday. But we can see here. Let me go to some more. Look, we can see. You just look for the entries. So let me take you back up to this one that we took on Friday. So what we had here is on the 1 minute. Look, we had a change of character. A change of character is just basically a break structure up and a break structure down, or a break structure down and break structure up. So I'll mark it out if you don't know what it is. So you can see here, we went down, up, and then price came down and broke that previous structure. Change of character. But then, with change of characters, you'd normally expect price to mitigate into the order block of where price broke structure, or where the structure break came from. However, I didn't wait for that. I entered here. I entered straight on the change of character with I think it was like a 20. I'll put the picture on so you can see it afterwards. I entered here. Price did mess around. And this is where I was talking about earlier. If you've got it wrong, you want to be out the trade. You don't want to be in the trade, let it run and take a load of profit. This is where risk management comes in as well. You don't want to turn it into a massive loss. It doesn't matter. If that breaks up there and closes above, I've got it wrong. So, or just this setup hasn't worked. So I can just flip the trade and make my money back. And if I let it run into 100 pip, loss, then I've got fucking 5 trades that I need to, basically 20 pip stop losses, 5 trades that I need to then, win in order just to make that one loss back, So risk management is crucial. Losing, you've got to become very comfortable with. That's something I want to say right now. But this looked very good because we've got a mitigation. Look, we've got a second breaker structure here. So it was looking very good there. So we got a change of character, second breaker structure, and a third breaker structure, and here I thought was going to start going down to at least this point. This is where my TP1 was. This is previous structure for the 5 minute. So because 1 minute and 3 minute have failed, we expect 5 minute to be tested. And if 5 minutes tested and broken, then we expect the next structure point to be tested, and that's how we, basically follow down with structure when we're trading with it. So we can see here on the 1 minute. Let me go back here. That was where I was at. Oh, no, it wasn't. 1 second. That was the second TP? I've lost track now. No, that was this was the first one. Sorry. Yeah, that was the first TP there. My first TP was this demand zone because of the reaction. And you can see 3 times, look, price, attempting to get into that zone and, bouncing off it. But what was we getting here? We was getting test of the zone, fill the high, fill the high, fill the high. So we can see here price is literally losing strength and testing support. Remember when I said it was testing resistance on the higher time frame here? That's normally means it's going to break in the opposite direction because it's coming up testing. That's exactly what's happening here. Remember, the market's a fractal, so everything happens basically on every time frame. But I knew that if this, and I didn't, because when I entered this, I didn't look at it as well as I should have done, admittedly. I looked at this and I was like, oh, it's mitigated, no problem. It's not going to go back up there. It doesn't need to before it drops. But it did. And after zooming in, after I entered, I was like, okay. So, and then price started shooting up like this, and I was like, oh, no, that's not a good sign. But then I saw this, and this is something you can use if you end up going in drawdown for your own peace of mind. Look for unmitigated zones like this, unmitigated order blocks. Because sometimes all price needs to do is tap into there, and you can see it didn't go any higher. So that's why my stop loss was here. Because if it went higher, I would have been wrong on this trade. I could have been unlucky, a liquidity hunt back down, but then I could have got back in, so it wouldn't have made a difference. But I knew trading structure on the 1 minute, after the breaks of structure here, this was the last point before the trade was invalidated. And I don't want to stay in a setup that's invalidated. I want to stay in a setup that's valid. And then was aiming for this low, and then after that low's broken, we aim for the next low, and you can see here, and then that's when that'd be the TP2, and once the TP2, and then we'd aim for the final one here, which did get hit. I didn't have a profit target set on there though, for the 10%. I wanted it to just keep running. I was like, screw it, made some big money off that trade, just let it run. That's the joys of making profits. So let me double check how long we've been on the video for. I hope that's made sense for you guys. I think we've covered a lot in this video actually in regards to technical analysis and even some emotional side of trading. So as I say, when you get on a chart, guys, mark your directions. Weekly, daily, 4 hour, 1 hour. Ideally, especially if you really want to be trading with the time frame, the higher time frame bias. It's not essential. You don't have to. It's just advantageous because you'd rather be trading on the side of the market than against it. When you've got more experience, then you can trade against it. Mark your resistance lines on the higher time frame. Zones of big rejection before like this, because chances are that will happen again. And you can see here, as again, if we zoom in on the lower time frame again, like good. Let's go down to the. I didn't show you this, did I? Actually, we took this entry in the signals group. Oh shit, where's it gone? I've lost me up and down. There it is. I like to keep that in sight for the video. So you can see when price gets into this zone here, it absolutely skyrocketed. So let's see if we had an entry. See, we did. So we saw price coming down, look. And this is where failed lows again. And look, if we use this indicator here, and we can see the sessions, so it would have been the low of the day as well. So London session. So in London session, we had prices coming down, manipulation here, down, and price, this point here, made the last low, which was this one. And then no candle closed above there. Sorry, closed below there. So you saw the rejection look from here. That was your first clue that was going. And if we get the 3 AMA out, you can also use this as a confirmation look. So right now we've come to the low of the day. We're in this strong weekly resistance zone here. We can refine this by going back in time. You don't really need to, as long as you're in the zone and you see what's happening with price action. Look, we had the first bit of inducement here that was basically, this should have induced a lot of buyers, a lot of sellers first. They'd have been wicked out. Look, people selling here, like they'd have put a sell here as the day opened. Probably maybe being wicked out, maybe not, it depends. And we've also triggered a lot of buyers, the opposite way around. Let's just put the buying one on here. As you saw, the rejection got a break of structure, so buying here again below, and then those are definitely being stopped out if they bought on there, unless they had it depends, negative risk to reward, but maybe they took some profit, maybe not. But it was very, very choppy there. You can see here the 3 MA give a really good from the failed lows. So there's two confluences there, and the third confluence, this big weekly support zone. So last low, where was the last low? This one. I like to be really particular when I draw, so even I class this, because there's two breaks below there, I'd like to class that. I'd like to class that as a break below. We can see here price broke below here. So you can see here on the 5 minute, price closed below a tiny bit, but then rejected heavy. And then price came down and struggled, faked out to close again. Never closed past this wick though. So this one here, or this one here. It's a low of the day there. So then we had another big engulfing. We had 3 engulfings here at this resistance zone. At the current low of the day, at a very strong zone to buy on the higher time frame. And the weekly and the daily, to buy. The 3 MA crossover there. You could have bought on the engulfing here. There was lots of opportunities to buy. Again, I'll show you the. So if you bought on the engulfing there, like you could have had a super small stop loss. Look at that, beautiful. You'd took profit here, and you could have left a runner to run up there. And what you could also use, again, in the confirmation, is trend line break. So in the trend line break, look again. And the trend line is valid when you go through 2 points. It doesn't matter if you measure it on the bodies, the wicks here. As long as you've got at least 2 points where the trend line is going to, it's valid. So you can see here, look, very nice trade. Daily was bullish at this point. Weekly was bullish at this point, was going right to the weekly low. We was expecting heavy rejection anyway. So that's what you got to remember. Yes, we got a break of structure down. It ended up being a fake out there. And then price consolidated here, filled the lows. And then what do we expect with a filled low? a retest of the highs. Now I've lost where I am again. Which the highs were here. And we did get that retest of highs, and we did get that break of highs, and then the rally started here. So just by identifying that, high time frame to low time frame, I mean, you could have caught some big bank on that trade. Look how many pips we caught all the way up there. 800 or something like that. And that was only since, what was it, a week ago? But yeah, I think we've covered a lot on this video, guys. I don't want to keep it going too long. Yeah, we've covered that little head and shoulders on there. Let's get rid of these indicators. Delete that EMA there. And that's it, guys. So I just thought I'd take you a run through there. Super easy strategy. Just remember, mark out your directional bias, mark out your supply and demand zones, reversal zones, whatever you want to call them, 4-hour and 1-hour charts, and then just wait for price to hit them. When price gets there, all the other shit doesn't really matter. You know, if your confirmation comes into light on the lower time frame and you get your confluences, as long as you wait for the zones, guys, you know, 9 times out of 10 you're good to go. Wait for the zone, get the confirmation, boom. You know, 90% of trading is fucking patience. And this is why people lose all the time and just make such a mess of the trading, is because they can't wait for price to hit the zones. Trading is not difficult, it's just waiting. Waiting, get the confirmation, enter. And that's it. Yes, it's annoying when you hit the stop loss, or it's annoying when you get let down or whatever, but it doesn't matter, it's just part of it, you know. Just call it market tax, you've got to pay tax to your business, you've got to pay tax on anything else you do. So you can't win every single time. And if you feel like, you know, you can win every single time, then trading's not for you guys. I go do something else. But anyway, got any questions, guys, you know, post them below the video, and I'll be happy to answer them. Apart from that, have a good day, and see you next week.